Today is a good day, and not because I particularly care about the outcome of the US election, but because the outcome of the US election did not cause the market to collapse and all of our trades pretty much worked out. Pretty cool, right? We still placed some earnings trades. We still ran our ETF strategy. Everything worked out perfectly. Pretty much the max return we could hope to get on the earnings trades was accomplished. The ETF trades simply didn't blow up. We saw the vol come down in the back months, but we saw very little movement in the front months. And because of that, we see things like what we see here on EWZ, where the Jans, we lost $38 because vol came down. But on the Novembers, we made $54. So that's that little bit of difference that we're capturing there. That's like kind of the thing that we're monetizing through this strategy. Overall, you can see it's a pretty good day for the portfolio. Up, we were up about 1% this morning. We're up about 0.7% right now. We had two earnings trades on today. We had CELH, which was a great winner. And we also had MCHP, which even though it's a monthly expiration, it was still a huge winner for us. I think because the monthlies are now expiring in like a week and a half. So it's not really that far out anymore. And we can sort of realize a lot of the gains on those trades. So if we come over here, we can take a look at where we stand with things. We're on a bit of a winning streak. Let's go for 5 today. We've got a lot of earnings trades, so we'll talk about a couple of those. But I really just want to take a second here and talk about what it was like trading yesterday with the US election. Look, I'm not going to lie, it was obviously a little bit more stressful. In the end of the day, things can happen, right? There is an event. But always remember this, the market knows there's an event. The vol prices in an event. And our question is, does the market vol... So the first thing we can assume is market is expensive. Vol is expensive, like pretty much always. So just sell it, right? And in the end of the day, you got to take a bit of risk sometimes in life. And selling vol is a game of holding risk. So just like sell it, yo. Do it. But also, like, obviously be smart about it. And like I said to some of the members in the group, I think I said it in the video last time as well. If you're not comfortable doing it, just sit out and then jump back in the next week. There's really no harm, no foul, because the VRP is not going anywhere. It's not like because Trump won the election, the variance risk premium's gone. If Kamala had won, it literally wouldn't have made a difference for this. So don't worry about it. Key thing to note, one trade that I am out of right now is XLF. I am no longer in that position. The reason I'm no longer in XLF is because we actually did see a massive rally in the underlying there. So let's pull up XLF stock. Right, XLF up 5.62% today. What a huge rally. Like, this stock has never seen a one-day move this big. Really cool outcome for us, though, was that the back month vol changed by enough. The move was enough that we actually broke even on the trade. So I was able to get out of this position that was now like wildly or pretty much out of the money for me for free. And so the hedge did its job perfectly, better than perfectly. It did more than hedge. It totally offset all the losses. And so we just closed out of that one. We will take a look to see if it's back on our radar on Friday. If it is, maybe we enter it again. If not, then I'll just put my money into another ticker. I don't really care. So it just gives me an opportunity to reallocate that capital, which I'm feeling pretty good about. So, because XLF was a little bit choppy the last few weeks, I think large in part because of the election, but it might be time to just reallocate that capital. All right. So let's talk about some trades here. First thing I want to mention, if we look at the ETF premium strategy here, we can see that there are now 20 tickers back on this dashboard. Basically, all the ones that we know and love are back on the radar. The reason this is important to note is because the reason they were not on the scanner up until today is because the implied volatility was so high for them all, and that caused the IV rank to shoot up. Right? We've been relatively low vol for a while, and because of that, the election caused the implied volatility to go into the highest percentile for all of them, which one of our risk controls, generally speaking, is to not trade above the 95th percentile. Even that, there's some nuance to it. It's not necessarily the case, which is why I didn't get out of the trades I was in. The 95th percentile thing is really to make sure we're not trading when stuff's blowing up, right? We're trying to avoid trading during a market crash, which is why I didn't bother getting out, because that wasn't what was causing the vol to be so high, or the implied vol to be so high. So with the election now being over, vol coming back down, things are back into a reasonable range, and we can see that everything's back on the radar. Here's all of our ETFs that we like. So we can take a look here quickly and see it for ourselves. Right here, you can see the IV crush, right? Down from 17% down to 12.5%. That's a huge crush in vol, right? That's a huge, huge vol crush. So, yeah, that's pretty much it. That's what I wanted to say about the ETF trade. We're back. We're back in business, baby. We'll keep it going. Next up, let's talk about a couple of earnings trades here. Quick update, by the way, the new earnings dashboard features. Thanks everyone for your feedback. That is going to be released most likely on Sunday evening. If not Sunday, then early next week. But we've been pretty decent with timelines recently. I'm feeling pretty good about it. I think you can feel pretty good about it too. It's just the feedback you guys wanted. We tried to do as much of it as could be done in a reasonable amount of time. We did that. All right, so let's talk about earnings today. We've got a lot of trades. There is a lot of trades on the map for today. Let's start by sorting by the earnings short straddle return. All right, we can see here that we've got 333 trades to look at. We're obviously not going to look at all of them together right now. We never do. You know that. But you guys also, if you're PA members, you should have this terminal. So, and if you're not a PA member, you should probably get it. So you guys have all this data, and we talk about it in the group together, obviously. So I'm not too worried. But I just want to always do this every single time, walk you through how I think about this stuff, right? So let's pick a trade here to take a look at together. HAL is the one that I'm going to do right now, just because the numbers look reasonable on the surface, right? It's what I mean by that is it's a $30 stock, so it's not like a penny. It's not $4 like AMC. You know, it's not $1,000. It's $30. Everyone can kind of trade it. It's relatively liquid, right? 17,000 options traded. The earnings is confirmed. Beautiful short straddle return. We love it. Ivy crush, whatever. IEM at 4%. It's a nice sized implied move. Average move at 2.32%. Boom, that looks pretty good, right? We see that gap there. That's the big thing, right? Implied versus average move. We like that. If we come in here, nice. The data looked how I hoped. I don't need to refilm this video. That's beautiful. So, earnings is tomorrow morning. We got a 4% implied move up or down. On average, 2.32% move. Max move at 5.6%. So I'm just going to be a degen and sell a straddle at like a 6 or 7% move. Sorry, a strangle. 15.61% average straddle P&L. We love to see it. You know, I don't even know what a minimum is for that I would want to see. I haven't really thought about it. Generally, for like the account size that I'm trading, most stuff I'm able to put on is above a 10% average straddle P&L. That's been pretty awesome. And you know, we'll see how we look at the end of this season, but we're on track to have a really solid season. So let's not jinx it, but let's just see how it goes. So looking at the back test P&L here, this is pretty much what we like to see, right? Like our threshold for this is not that we need to see a perfect P&L. We can't have no losers. That's like not what we're looking for. What we are looking for here is a backtest P&L that reflects the profile that we are looking for. We want to see many small winners and the occasional big loser. So if we see a P&L that's choppy, up and down the whole time, that's not too attractive to us, because it signals to me that the market struggles to really price vol around this earnings. Every single event, it's either a winner or a loser, back and forth, back and forth. It'd be like if every other car you insured crashed. Like, you're obviously not good at pricing insurance and knowing where to insure, right? Like, it wouldn't make sense. So I want to see something that looks like this, where it's okay that we have losers, but the shape of the P&L, the shape of the returns matches the profile that we're looking for. If we look at the individual events here, let's just zoom in on the jumps, something I like to do. You can see there's 2 events where the jump was bigger than the implied earnings move. Jumps were around 6%. It's one of the reasons why I'm structuring my strangle that way. I don't overthink it. I just try to keep the realized move inside of the range, and size the trades really small so that inevitably when there's a giant move, I don't end up in the soup kitchen. Let's take a quick look at how the implied earnings move has changed, right? So obviously I like this. This is cool. Gives me some idea of what to expect, right? Generally, we should have winners here. Occasionally, 6 to 10% moves. That's what I'm going to kind of price in. I'll price in a max move of probably about 10% as my risk, and then I need to be able to survive like a 50% move. I usually double the max historical move, and I say that's like, I expect that to happen a few percent of the time. And then like 0.1% of the time, I expect like a 5x move on that. Okay, we can actually see here that the implied move got crushed. This might be an earnings related thing. I'm thinking it is. This, when earnings is like pretty much event vol, so doesn't surprise me to see this. It doesn't change anything that I want. Immediately my mind went to, when I see something like this, my mind immediately goes to pre-releases, right? Something like that. I don't see that being the case here. I think that's just earnings vol, so I'm not too concerned. Looking at the seasonal plot here, we can see basically small moves in this quarter. That's what we love to see. Easy game. Knock on wood. Hopefully it's easy game. But obviously we have enough trades today that I feel pretty good overall. We're going to put on a bunch of these. I'm going to need to spend like an hour at the end of the day today to go through a bunch of them. I usually just sort by the straddle P&L and then just work my way through the first like 30 tickers, something like that. But yeah, we're going to try and get a good amount of trades on. I hope that everyone else had a pretty successful day, regardless of your, political affinities. If you were running the earnings strategy, it should have gone pretty well today. The ETF strategy was looking good. As long as you didn't YOLO your life savings on DJT, you should be doing all right. And that's pretty much it, everyone. I know that I promised one of the guys who left a comment that I would do a review of one that is a losing trade, one that I wouldn't take. But I'm going to do that for the Friday video because, or maybe next Monday's video actually, because I wanted to talk about the election stuff. I wanted to still do this analysis for y'all. So we'll get to that on Monday. My apologies, buddy. But, it was a busy day. All right, everyone. I hope that this video was helpful to you. Honestly, if it was, please do leave a comment. Our videos get 150 views. We're not famous. We're not celebrities. The algo does not like us. We're counting on you to help us grow our community, right? You guys all know our goal. 1,000 members. That's all we're aiming for. We want to have 1,000 members. We want to build the most epic option selling community. And we need your help to do it. So please leave a comment, like the video, dislike the video. I'm pretty sure that even helps us. Share it. And that's it. We'll catch you on Friday. And if you're already a member, we'll see you in the group. Take care.